All right, so I actually was not able to stream this morning because I just had I had a lot going on, and I didn't actually place anything new, so I just saved the stream for the midday check-in. But I can't remember if I did this live, but this yesterday I placed an order, a sell limit on the 175 34 175 to play and front run a little bit of this zone, this inverse shooting star candle right here on the 30-minute. Very, very nice candle formation with a very strong move that came from it afterwards. And I think I got lucky in that it just barely picked me up by like 4 pips or so, 4 points or so. Hit profit at the 250, and then I re-engaged this level after the market opened, and it didn't do that much compared to some of the previous days. I mean, not every day can be a crazy day, and so I stayed away from it until the market opened, and then when I saw that the momentum was still kind of low, the hourly RSI was still at at or below 40 ish, and definitely below 50. So it's on the lower half of the momentum spectrum, and we had I'm playing the same thing, same move as yesterday, except I'm playing it on the 4,000 even with this hourly candle shooting star formation right here. That this little guy right here. So I played that. That's what I wrote in my notes here. Limit sell at the 4,000 because of the shooting star, and RSI is below 60. Now I don't know if this is going to work. Right now, so far, it's working pretty well. Once I hit the halfway point here, I'll move the stop up to break even, which is the same thing I did yesterday. I just wasn't on stream to show that. But once I hit, I should probably set up an alert here since I'm here anyway. What's the midway point between 750 and 4,000? 3754,000 is got to be 875. Yeah, 125 each. Yeah, split the difference. Okay, so it's, oh shoot, nope, sorry, that's not, I did not mean to do an order. I meant to do an alert. Jeez, that would have been bad. 875, and it's to move as stopped break even. That's the note. Technically, I already hit it once. I'm gonna give it some. I'm gonna give it some room to hit it again, and hopefully this works out. Now, my Nasdaq trade from yesterday came. I mean, it was just chopping around. So, the learning takeaway from the Nasdaq and the S&P 500 is that I don't have as good feel for it as I do the US 30, the Dow. The Dow moves quarters like crazy, very easily, and it's very fast. So the 75 risk for a 250 reward makes a lot of sense, and it works a lot of the times because it happens very quickly. Now, for the Nasdaq and the S&P 500, I was looking at it, looking at the minor levels, and I was experimenting with it. I'm not entirely sure whether the 25 risk for a 75 or 100 point move up, like I'm not entirely sure that's a good fit for this type of trading account. It would work, but it might be too slow of a move. Uh, I'd have to do more back testing, which I don't really have the time to do at the moment. It does work. The edge is there, even though I took a couple of trades and I lost on it. I know the edge is there just by looking. What I don't know is how good of a fit it is for the pace of the growth of this account. Um, Obviously, the best way to think of that is to ignore the pace of growth and just take what the market gives you. That's obviously the best, but the reality of this is it's not really my account. It's a prop firm account. It's an evaluation account. So the speed matters. There is a psychological component there where the advantage is it's not my money, so I could trade a lot more relaxed and there's a lot less pressure. At the same time, because it's not my money, and I have to hit certain milestones in order to get paid and put money in my pocket, speed matters. Speed matters way more than if it was just a long term account of 100% my own money that I was managing by myself. So I might readjust and look at more, not as much smaller day trades like the quarter moves on the US 30, but not as much of a long term swing trade where it could take literally like a week to hit my target. That might be a little bit too big of a trade or too long of a trade. So I got to find that middle ground sweet spot for the S&P 500 and Nasdaq. Right now, like even though the US 30 has been causing me a lot of grief because of how choppy it is still the one that I am the most familiar with because I've been trading it exclusively for at least 3 months. So I do feel the most comfort with it. That might just be something like a psychosomatic deal. However, that matters. that psychological edge definitely matters when it comes to trading. So I'm still gonna experiment with these small moves, but or rather these big moves that really take long on the Nasdaq and the S&P 500 to just incorporate more of the indexes because these are bigger indexes than the Dow. But for now, the profits have all my profits have come from the Dow, so I can't get rid of it completely yet. It's more of a diversification than a replacement.